We are sitting on a gold mine. In my opinion, dial market is sitting on a gold mine. We have, again, 18,000 plus collectors worldwide in our ecosystem. I believe this is about $200 million in potential revenues. We're looking for companies that carry the type of inventory, that have the type of marketing, that have the type of culture, that have a platform that will be synergistic with what we have. Because again, like I said, I believe we're sitting on a gold mine. We got this community, which is, I'm saying it could be $200 million in potential revenues. If we plug in the e-commerce platform, which is already doing, I don't know, let's call it 10 million a year. They have the inventory that our people want. We're gonna probably, I don't know, double their business. So it's gonna be synergistic. It's gonna be accretive. We're having some pretty substantive conversations right now with a couple of players. One of them is doing well north of $10 million in revenues. Could we announce an LOI in the next few weeks? Yeah, potentially. Okay, welcome everybody to New World Solutions debut live stream presentation. My name is Jack Marks. I recently became the chairman of the company. Some of you know me from the other side of this of the desk, so to speak, as from the Wall Street Reporter live streams, where we've had many success stories of countless stocks that have become multi-baggers, increased 1,000% or more. And you know what? We're going to find out. We're going to find out if New World Solutions could become that next success story. So I'm going to walk you through a quick presentation, and we'll open it up for questions. Hello, Ben. Good to see a familiar face from the past. And so let's get into it. Let me pull up the deck over here. Okay, here we go. Okay, so New World Solutions. REGRF is the symbol over the counter, news in Canada on the CSE. Quick disclaimer, which of course we have to show over here, and let's get into it. So the structure of the company is this. So New World Solutions owns 51% of Dial Market, which is a media and e-commerce platform serving the $31 billion global wristwatch enthusiast market. So again, guys, I don't know if you've been paying attention, but if you've been watching things on Instagram, all over social media, the watch collecting thing is huge. We're going to show you a couple of slides, but McKinsey and Company, the major consulting firm, they've been really doing a lot of research on the market, and their last study is saying that the resale market is $31 billion. That's the market for used Rolex, Patek Philipe, Audemars Piguet watches. Just like the used car market is a massive multi-billion-dollar market, the watch market is the same type of thing, except the one thing is we don't have yet a major player in the space like a Carvana or a CarMax, anybody like that. And so I think it's an incredible opportunity that's wide open. So what we're doing is, Dial Market, we're developing a digital ecosystem that unifies content, commerce, and community. This slide may be a little bit controversial, but I think it's very important to think big. I've always said that. Again, if you aim for the stars, worst case is at least you'll get to the moon. So I believe, again, my opinion is that Dial Market is a ground floor opportunity, and we have multiple paths towards a potential billion-dollar valuation within the next, I would say 24 months. 18 months might be a little bit aggressive, but I'm going to show you in this presentation some of the multiple paths we have towards this potential billion-dollar valuation. I know it sounds crazy, but look, somebody has to do it. It's been done before. I've seen it done, and you guys have seen it done as well. So let's get into it. So again, let's talk about the luxury watch market. What are we talking about? So $31 billion globally, according to, again, McKinsey and Company. That's only the pre-owned market, the resale market for used Rolex watches, Patek, all that stuff. And the total watch market is, believe it or not, $75 billion at retail. Again, this is all coming from McKinsey. At the bottom of the screen, you can see some of these are like screenshots from social media, just to show you kind of what's going on, because there's some, there's some incredible things happening. So you got, Logan Paul, who's a big watch collector. I think his brother is going to be fighting, was it Mike Tyson? So, that's his Patek Perpetual Calendar Nautilus. Yeah, it's like a $250,000 watch. Jay-Z at the bottom of the screen, you see there, major watch collector who's also actually invested. He's actually made a significant investment in a company in the space, a digital platform in the space. And I'm going to show you a couple of some of the institutional players that are coming into the space. So, and again, of course, you got Tom Brady, who's also a big watch collector. He's actually selling some of his watches at Sotheby's, I think, next month, which should be interesting. We got, of course, at the bottom, you see there, Grant Cardone, who you see all over social media. He's done a bunch of videos on watches. Of course, you have, what's his name? Mr. Wonderful, Kevin O'Leary. His Twitter feed is completely watch content. Okay, so what is driving the watch market? The growth is driven by a couple factors. One is there's just so much more information availability. You got social media. These are things which did not exist, 10 years ago or 20 years ago. When 20 years ago, they may have bought the first Rolex, and that's all they knew about. They knew about a Rolex. Maybe they knew about Patek. Today, you got so much content coming at you, so you see more products, more things that are available, and that kind of drives the whole consumer culture. People show stuff on social media. People get interested. So the whole market has completely opened up, especially in the last 4 or 5 years. Now, some people have been saying that. There's a couple of people saying on social media, "Oh, the watch market is dead." There's the famous expression. Well, what happened is during COVID, there was a massive boom. The market probably tripled in size during COVID. It exploded. Literally millions of new collectors entered the market. Some of them, the prices went ballistic. Some prices doubled, tripled, or more. And things they're getting back to normal. So actually, the watch market, in my opinion, is entering a golden age. Why is it entering a golden age? Again, because of the things we're going to be talking about. There's a whole bunch of new collectors that have entered the market, and the categories have expanded. What you had, 2 years ago during COVID, everybody was buying the same watch. Everybody wanted the same watch because you had all these newbies that came into the market. All they knew about was Rolex. They wanted a brand new Rolex. Now you have people who are more sophisticated. They're more evolved. They're getting more into vintage watches, into independent, all sorts of areas, and that completely opens up the market. So again, watches are at the center of culture today. You see that, it's referenced in music videos, on social media, on works of celebrities, athletes, entrepreneurs. Again, these are all things from social media. We're seeing from social media. You got Cristiano Ronaldo, big watch collector, also investing in the space. Tom Brady, John Mayer, of course, very famous, and Conor McGregor, right? Big watch collector. Again, all his Instagram is his watch collection. So again, everything gets amplified through social media. That drives interest, demand for collectible watches. And I'll tell you what's interesting. New World Solutions, this stock is the only pure play. That's right. This is the first and only pure play in this entire $31 billion market. And I think that's very interesting. It's something I'm going to address. And again, guys, if you've read, I wrote a book on the topic of, what does it take for a stock to become a 10-bagger? #1 bestseller on Amazon, 10-bagger blueprint. Again, I'm not here to plug the book, but one of the concepts I do talk about is it's important to have a stock that's part of a big theme, and especially if it's a pure play and one of the few pure plays, because again, supply and demand. When investors want to get into AI stocks, 2 years ago, we only had a few pure plays. Now we have a lot more. With watches, this is the only game in town. Okay, so if anybody wants to get a pure play in the watch space, and again, for institutions, this is a little bit early. We got to have some substantial revenues, but again, at some point, investors that want to have exposure to the space, this is the only game in town. REGRF and news on the Canadian exchange. By the way, I'm going to be showing you some of the institutions that are piling into the space. So speaking of institutions, so follow the money, guys. If you want to know what is the next big trend, you have to see where the smart money is going. Again, why did Wayne Gretzky become the greatest hockey player of all time? They asked him. Wayne, how did you become such a great hockey player? And his answer was, most players, they follow the puck. They chase after that puck. I go to where the puck is heading and I wait there. That's a big difference. So right now, and again, same thing with stocks. You don't want to be chasing trends. You want to be positioned early before everybody starts piling into these things. Again, something I talk about in the book. And I've talked about it on many of our live streams. Institutional validation. So you have a couple of benchmark transactions in the space. You have Watchbox. Now they changed the name to 1916 Company. And also Chrono 24, which a lot of you know about. So those companies have raised, I think the numbers could be like 500 million. Either it's this actually, I think this might be in there, but the numbers are substantial. It's somewhere between 200 to 500 million, I believe, at valuations of about $1 billion each. Again, these companies are private, so we don't have, absolutely accurate information here, but these are, pretty the numbers are pretty much on the ball. So some of the investors in the funding rounds have included, Bill Ackman. You guys see Bill Ackman all over, CNBC, multi-billionaire hedge fund guy, big watch collector as well. I think he invested in Chrono 24 or Watchbox 1916 Company, one of those. Bernard Arnault, the guy who owns LVMH, the world's #2 richest man. Tom Brady, Mike Ovitz, Hollywood super agent, and of course we have Cristiano Ronaldo, the soccer player who's also invested in Chrono 24 recently. So again, let's talk about our growth strategy. So Dial Market, again, that's majority owned by New World Solutions. We have a 3-part growth strategy of 3 pillars, sort of the 3 C's: content, commerce, and community. And really, what we're developing is it's kind of a synergistic flywheel. All these 3 drive, the other three components: content, commerce, and community. I'm going to show you exactly how that works. So first, we're starting off with pillar number 1 is content, and really video-first content. So we're creating a lot of content, for YouTube, Instagram, etc. Our, the website, which is watchreporter.com. And I'm going to be showing you some of our, again, talking about the watch community. So our goal is to really develop the premier brand, really a destination for wristwatch enthusiasts, which, includes, watch reviews, auction previews, interviews with collectors, all that stuff. So, again, people like to talk about, they want to learn more about watches. Anybody that follows this stuff on some of the many watch channels out there knows exactly what I'm talking about. And this channel really launched, the Watch Reporter channel on YouTube. I don't know, it's only, 8 months, 9 months old. So it's pretty new, but we're seeing some very nice growth. So again, this is some of the types of content. Let's talk about the community. This is one of the most important aspects I'm going to be addressing here. So, the goal, our goal really is to develop a really strong community, catering towards, the watch enthusiasts. It's going to be a major pillar kind of in this flywheel. And we're really going to be leveraging, again, all the technologies out there. But the stuff is basic. How do you get, what brings people together? Things haven't changed in millions of years, right? So online forums, that's something we're going to be adding. Live chat, the interactions, which you see on Instagram, on the YouTube channel, everywhere else. That's part of it. It's very basic. In-person events, that's something a little bit down the road, but that's something also, again, very, very effective. Again, not a priority, for at least the next 12 months. But this is the main thing, right? Everything really comes down to revenues, right? That's one of the big questions everybody has is, okay, how do you make money with this, right? How do you make money? We do have revenues coming in from, the ads, advertising, etc. From our content on YouTube, etc. But the real money, it comes from e-commerce. So when we launch our e-commerce platform, that's, I think, when you're going to start to see revenues. And by the way, I'm going to be sharing with you something which a lot of people are not aware of. And one of the reasons why we're doing this live stream, because here's the thing. Look, guys, I've been around microcap stocks, I don't know, 25 years plus, okay? I've helped create countless stocks that became multi-baggers, dozens of stocks that became 10, maybe 100 stocks that became 10 baggers over the course of my career. A couple of hundred baggers, I can't take full credit for those. Again, I literally wrote the book on what does it take for a stock to become a 10 bagger. Okay, so I think I know what it takes. And one of the things is many investors are they're very jaded, especially the Canadians. We know all these stocks in the Canadian exchanges, they're basically, most of them are vaporware. Okay, we know the reality. I have a chapter in the book that talks about a lot what the categories. Many of these things are what I call fake it till you make it companies. This company is actually, we have a real business model, and I'm going to be showing you real revenues. Okay, I'm going to be showing you our built-in revenues. I'm going to be calling it built-in revenues. I'm actually going to show you a path towards the first $1 million in annualized revenues in the next couple of minutes. I'm going to show you exactly. I'm going to give you a real demo so you can see with your own eyes. This is not a story. I'm going to show you a very clear path to how to get there. But ultimately, e-commerce is going to be 98% of our revenues. And we got a couple of different formats we're going to be introducing, including fixed price listings. We're going to leverage video very heavily. We're going to do auctions, live streams, re-commerce, which is very important. That's where we actually take in consignments. We buy watches from the community, because again, we're dealing primarily in, just to be clear, we are dealing, our e-commerce is focused on the resale market for high-end, luxury watches, whether it's Rolex. And let me show you some of the inventory, okay? Because, some of you guys may have missed one of the first press releases, which mentioned, again, things, go right over people's heads. It had a little snapshot of the balance sheet of Dial Market. And we actually have, the company has inventory that's ready to go, wholly owned inventory, ready to go for our e-commerce platform, which, could generate, I believe, sort of, which can get to, I'd say $100,000 in maybe six to 8 weeks to get, and that'll get us to that, $1 million in annualized revenue. So what do we do? So, the e-commerce platform is, actually, I shouldn't take off. So what's in the box? Okay, this is, typical thing that we're going to be selling on the e-commerce platform, show and tell. We got a Rolex here, Audemars Piguet, Royal Oak, very hot watch. This is going to be like a $38,000 watch, very rare dual time watch, very desirable. We have vintage Patek Philipe, again, I don't know if you can see here. Ellipse, very rare model, again, very desirable. I'm going to show you a couple of other pieces, but again, this is the type of stuff that is going to be on the platform. So what's in the box? So, one of the things is going to be, of course, the stuff that everybody loves, which is Rolex. Of course, a very, very, very small margin on these watches, on Rolex, I should say. Rolex is very competitive, very thin margins. The real margins come in on, the vintage watches, stuff like this, Piaget Asprey edition. Again, very rare. This is where we have decent margins. And again, this is going to be a watch that is going to be on the platform coming up. I actually have a similar watch, which is, of course, the iconic Rolex Submariner, also known as the Bluesy or the King Tut, right? Very desirable. This is going to be probably coming in at around $11,000 on our e-commerce platform when it's going to launch. We're going to have this Patek Philippe, again, vintage watch with the beautiful stone dial. A model from this family just sold for about $25,000 at an auction last week, which actually is very bullish for this, right? So again, when you have comps in a space, that drives valuations. I'll explain to you how that works, and it is very, very interesting. So let's get into that. Okay, let me pull this up. Okay, so very important. So again, our main objective right now is to launch our e-commerce platform in the next week or so, week to 10 days. And I think that our platform, once launched, we could hit a run rate of $10 million in annualized revenues within 12 months of launch. Okay, let me repeat again. I just want to be very clear. Okay, we have a path to get to a $10 million annualized run rate within the first 12 months. What does that mean? I'm not saying we're going to do $10 million in the first 12 months, which is between now and next October. But I believe by next September, October, we're going to be hitting 800 grand, $1 million a month in revenues, potentially. Again, nothing is a sure thing, but I'm going to show you the path for how this can happen. Again, this is organic. I have not talked about the our M&A pipeline, which really I think it could be extremely transformative, something that a lot of people don't understand yet. So again, what is this? How do we get this $10 million in revenues from a zero? How do we go from zero to a $10 million run rate? Again, for any stock, to have this, massive upside potential, again, something I talk about in my book, 10-Bagger Blueprint, you got to have velocity. You got to have, revenue velocity. The market rewards speed and the market rewards hyper growth. So what the market really wants is a stock that goes from, zero revenues to $200,000 a month revenues to $500,000 a month revenues, within a 6 to 9 month period. That's very exciting for the market because then the market starts extrapolating, okay? I talk about it in the book, 10-Bagger Blueprint. By the way, what's interesting is, look, you've seen, we've had, countless CEOs on our live streams. We've had literally thousands of CEOs have been interviewed on Wall Street Reporter since 1997. No, 96 was when the site was first launched. And we have some great questions coming up. We're going to be definitely bringing those up. Very interesting questions. Again, thousands. We've had probably, I don't know, how many thousands of CEOs? I would say 5,000 plus CEOs have been interviewed, maybe more, on the Wall Street Reporter platform since 96, maybe 10,000 over those years. And I can guarantee you that none of them have ever, written a book on what does it take for a stock to become a 10-bagger. None of them have a track record of producing stocks that have become 10 baggers, 20 baggers, 50 baggers, and even 100 baggers. So I think that kind of gives you a significant advantage as shareholders in this company. Now, again, nothing is guaranteed, right? This is a very high risk stock. Let me be very clear. This is very speculative, very high risk, early stage company. This is public venture capital, okay? But I believe we have a significant upside potential, and this is what I call an asymmetric bet. That's what we call it in the 10-Bagger Blueprint book. It's an asymmetric bet. You're risking 3 cents for potentially, 10x, 20x, or even more upside potential. Again, I'm not saying it's going to go to those numbers, but the potential is there, and I'm going to show you exactly how it can happen. So how do we get to this $10 million run rate? So we have this 18,000 plus community of watch enthusiasts between our YouTube channel, Instagram, the Watch Reporter website, the email newsletter. Guys, we are sitting on a gold mine. In my opinion, Dial Market is sitting on a gold mine. We have, again, 18,000 plus collectors worldwide in our kind of ecosystem. I believe this is about $200 million in potential revenues. It's a pipeline of $200 million in potential revenues. How does that work? I'll explain. Which, by the way, we could monetize at about 5% a year. So again, I'm not saying we're going to do 200 million a year, but I believe the pipeline of our kind of ecosystem, we could monetize roughly at 5% a year. So again, we have about 18,000 of these watch collectors. I believe 5% of that audience is going to do business with us. How do I know this? I'm going to show you the core samples, as they say in the mining business. I know many of you guys are mining investors or speculators, really. You're going to see. So again, the path to $10 million in annualized revenues, again, within 12 months of the e-commerce launch. Here is the core sample. Here's the core sample, okay? So again, we got this community of watch collectors. In this community, we have about 40 or 50 what I call, whales, okay? Guys who have, collections between $1 million to $5 million, maybe even more. How do we know this? go to the Watch Reporter YouTube channel, look at some of the collector interviews, the collector reviews, and you can see in these videos these guys actually showing you their collections in person. Whether it's a guy with a $10,000 Rolex, or he's got maybe a $30,000 collection, or it's a guy with a $3 to $5 million collection, and we have those guys on our channel. Okay, we have those guys. You can see those collections on videos. This is not made up. It's not fiction. That's a core sample. Okay, it's just like in mining. The geologists they figure, okay, we have this potential. We got this potential resource. We got or whatever they call it, but this potential project. Then they start drilling, right? They start drilling. They get those core samples, and they pull out a small sample that shows, okay, do we have how much gold is there, right? How much is there? So this is what we have. If you go to the channel, you go to the YouTube channel, the Watch Reporter YouTube channel, you're going to see a couple of videos. That's not our entire audience. That's a few people. Again, just like in talk radio, which I don't know, people listen to talk radio, but back in the day, talk radio, there was a metric which said that for every single call-in, everybody that would call in the show, there's usually like 10,000 plus or 50,000, whatever the number was. There's a huge number, 10,000 or 50,000 that are quiet in the background. Very few people are actually going to call into a radio show, or I got to tell you something, very few people are actually going to show up on our one of our video live streams for a collector interview, because again, in the watch space, people, they want to be discreet. They don't want people to know that they have, $1 million of watches at home. Okay, it's not a good idea generally to let the average, the unwashed masses know that you have these watches. Okay, so by the way, the watch I'm showing you, I just brought them out here. These are actually going right back into the Dial Market Bank vault. That's right, at Wells Fargo. So yes, so we got about 40, 50 of these whales. Let's do the math over here. So again, if you have 40, 50 guys with $2 to $5 million collections, that's about $100 million right there, potential inventory. Then you have about 10,000 normal guys, just regular guys who have, they got 1 to 4 watches. And you see those on our channel. And this could be a, $10,000 to $20,000 collection. Again, do the math. That's about 100 million. Again, the numbers that could be plus minus either way. And here's the thing, this community is only about 8 months old and it's growing rapidly. Our goal is to get to about 50,000, build a community of about 50,000 plus, which is really going to be 5x what we have now. I think that's going to be a $1 billion potential pipeline in organic revenue. Again, potential, keyword potential, which we could monetize at about 5% a year. Now, how do I know this? Is it me saying it? No. Guys, watch the videos. Go to some of the videos we have on the Watch Reporter channel. I'm talking to the guy who's got the Richard Mille collection. By the way, very young guy. He's got like $1 million collection, driving Ferraris. We've got a guy in Hong Kong who's got like a $5 million collection. Incredible. Guys with $30,000 collection. Now, how do I know that they're going to do business with us? Because they're telling us. You can watch the videos. They're saying in the video while we're talking, they say, yeah, I'm interested in this watch. If you have it, I'd be interested in buying it. You can see it in the conversation. And by the way, it's spontaneous. They don't even know about that we have a public company. Okay, this is 99% of those people in the audience. They don't even know about this yet, right? I haven't been talking about that on that Watch Reporter channel yet. So this is a brand new thing. Now, again, once the thing launches, we're going to be very aggressive about getting the word out there. But again, if we have 50,000 of these guys, right, we go from 18 right now to 50,000 because we're going to put marketing dollars into it. We haven't done any real aggressive marketing yet. It's all been, pretty much organic, right? Once we start bringing in some members on our team, some real marketing superstars, the social media is going to be a huge, huge thing. And that's when you can see this community start to grow to this 50,000 number, which is really my target. I think it's a relatively conservative target for 12 months from now. Again, you got 50,000 people. You just do the math. It's a multiple of this. Potentially, it's $1 billion in watches. Now, when I say potential inventory, that means they're going to be buying or selling. We make money on either way. If somebody wants to sell us a watch, right? They want to sell us a watch, or they want to consign a watch. That's great because you make your money from the inventory, right? people, again, some of you guys are going to ask, well, how do you generate these revenues? How do you? It's very simple. And again, I've done this in other industries before. If you have the product, okay, if you have the product, it sells itself. This stuff sells itself. You don't need a salesman to sell these. Okay, the product sells itself because we have people constantly searching for, Rolex Submariner, which again, one of the world's most desirable watches, Audemars Piguet Royal Oak. Then you have your kind of, more sophisticated collectors who are into vintage watches, that are into like the Patek Philipe. By the way, this actually was the model for the Apple iWatch, allegedly. This is from the 70s or early 80s, roughly. Very interesting. And by the way, Kevin O'Leary says watches are better than gold as an investment. That's his quote. His watch collection has outperformed his, and he's a big gold guy. Why? Because these things actually increase in value. Okay, a watch like this, basically, this probably doubled in value in the last 3 years. Watches like this have doubled in value. Rolex Submariner is up about 50% in the last couple of years. The watch on my wrist, I bought 7 years ago, and it's tripled since then. Okay, why is that? I mean, if you get the right watch, there is money to be made there. By the way, we have some incredible questions, which we're going to be getting to right after the presentation here. Guys, thank you for the questions. Do you need to raise money soon? Do products? Okay, great questions. We're going to be addressing all of those. So again, all the stuff, it all starts again with that community. And again, if you go to the YouTube channel, the Watch Reporter YouTube channel, you're going to see it right there. We have an engaged community. We have, we got, almost 3,000 on YouTube, which is not, it doesn't sound like a lot, right? But again, it's in a few months, it's organic. And again, these are watch collectors, and it's going to start scaling from there. We got a lot of people. We got 15,000 on Instagram. We got a huge, not huge, but we got a rapidly growing email list, which we're going to be focusing on in a very big way. And again, you see that engagement. You see those people who have, again, expressed interest that they want to buy and sell certain watches. And again, we're talking about, $200,000 watches, $20,000 watches, $50,000 watches. Okay, it all adds up. Okay, you sell a couple of these a couple of $100,000 watches in a month. All of a sudden, you got $2 million in annualized revenues, and that's 2 watches. Okay. And you multiply that by a 10x multiple, which I believe the market could award this company, this stock, if we can scale in a rapid way. Again, not saying that, but again, the market does give a 10x revenue multiple to high growth stocks in kind of that early hyper growth stage. What I call the 10-bagger window. Again, something I talk about in the book. So let's get into it right here. Okay, so 3-phase growth strategy, which we're kind of getting into right now. This slide is kind of, I guess this is from an earlier thing. Anyway, 3-phase. Number 1 is develop the content community. Number 2, launch the marketplace. Number 3, leverage the content with ancillary products. That's down the road. That's 12 months from now. Our main focus right now is really launching the e-com, and whether we launch it organically, we have some acquisitions we're looking at. I'm going to be talking about. So look, I think very important for investors is, I'm not the CEO of the company. I'm the chairman of New World Solutions. I'm the CEO of Dial Market. But one of the things I do talk about, again, in the book, 10-Bagger Blueprint, it's very important for investors to have, a leadership team, whatever, it's chairman or CEO, somebody that knows what does it take for a stock to become, a 10-bagger, and who's focused not just on a 10-bagger, but I have a much more aggressive outlook. I think every public company CEO, their goal should be to make that stock become 100x. That's right, not a 10x, not a 2x, but 100x. That should be their goal. Why? Because look, if you don't aim for the stars, somebody has to do it, right? And again, I've had a couple of stocks that have become 100-baggers. Unfortunately, I did not hold them. We actually introduced some of them early on the Wall Street Reporter years ago, including Axon, which went from like $1 to $300. It was originally called Taser. Rick's Cabaret, which nobody believed in. It was a 50-cent stock, became a $100 stock. And MicroStrategy, Michael Saylor, that crazy guy, Michael Saylor, in the late 90s, he first showed up on our platform, and he was an early client. I think he wasn't doing the big programs, but he did one of our small programs, and that stock I think went up 100x back in the 90s. Again, that was a crazy market, but again, in my opinion, every CEO should be focused on maximizing shareholder value, because again, with a private business, the focus should be revenues, profitability, etc. With a public company, investors, all you guys care about, let's be honest, you guys are asking all these questions, revenue, etc., all this stuff. All you really care about is if the stock goes from 3 cents to $3 potentially. Again, I'm not saying it's going there, but again, you don't care what the company does, whether it sells watches, whether it sells pens, whether it sells toilet paper. You don't care about anything. Okay, all you care about is if the stock goes up. Okay, but let's be real. To have that sustainable upside, you got to have fundamentals to support that, right? So again, we're not here. This is not a promotion. It's not a campaign to pump up a stock. We need to have real sustainable fundamentals which are going to support that. And I believe we're building that. Again, the only way we can have the real upside is the revenues. At the end of the day, what's going to drive the stock is the revenues. And by the way, our $1 million in annualized revenue is right here on the table. Okay, right here on the table, I have in this tray that I was showing you these watches. I missed this guy. This just came back. This was just in service. Rolex Precision, actually a very rare vintage model, fresh from service. Hasn't unsealed actually for LA Watchworks. Our good friends at LA Watchworks. So right here on my desk is basically it's $100,000 in potential sales, and if we do that within a 30-day period, which we can, that would translate into, let's do the math. What's $100,000 if we do that month after month? It's $1 million, right? Now, what happens when we sell these watches? We take all that money as we sell this watch for $37,000 or whatever it's going to go for. We're going to take that $37,000. We're going to plow that into the next inventory, over and over and over again. That's how it works, right? So we sell $100,000, we buy another $100,000, and over and over again. That's $1 million. But the market's not going to be excited about $1 million revenue run rate, right? And again, $1 million in annualized revenues is, if we hit $100,000 a month, if we announce $100,000, I think the stock would move for sure. Again, my opinion, not advice. I'm not saying it's going to go anywhere, but that would be a 10x multiple. I believe that's what we could be awarded. That would be, $10 million valuation. Again, do the math. Let's call it 200 million shares outstanding. What is that? What's the math? Is it a nickel, 10 cents a share? I don't know what the number is, right? But our first benchmark is right here. The first milestone is right on my desk. Okay. By the way, we got some great questions. I see we got some guys trying to spread FUD and all that stuff. And I'm all for transparency. I love these usernames. Great stuff. Unbelievable. So here we go. And again, I believe completely in transparency. I'm not hiding behind a keyboard. I am out here in the arena, and I will answer any question. Okay, so guys, here's the advantage that you have, quite frankly. Again, I don't want to brag or anything, but again, there's no other CEO out there that has a track record of, again, knowing what does it take to, have a stock become potentially a 10-bagger. What does it take? And by the way, some of you are asking, where have you been? How come you haven't been doing Wall Street Reporter live streams? Well, I've been busy. I've been busy actually building dollar market, putting things together, working on the M&A pipeline. And here's the thing. When after I finished writing this book, I was thinking to myself, what is it? We've had stocks that became 10 baggers, 20 baggers, 50 baggers. The last cheap stock I got involved with was a nickel, and that was CBDT. Anybody remember that? That went from a nickel to $2.50 in 4 months. Now that was an outlier. Okay, that was an outlier. That was a fluke. It was a crazy. It should have been a 10 bagger. It should have been a 50-cent stock. It did have a story that should have been 50, but again, COVID, really amplified everything by a factor of 2x. So stocks that, should have been, 5 baggers became 10 baggers. That's what happens. But you got to take advantage of that. So again, we have a guy like Fitzham. Listen, you're not the only guy. Go to my website, 10baggerblueprint.com, and I have testimonial letters from countless investors. I have letters here on my desk, not my thing on my other desk, from investors thanking me. They send me boxes of cigars, expensive cigars, all stuff, thanking me because they made generational wealth. We had guys that made, that turned a couple $1,000s into millions of dollars. Okay, people made generational wealth with that stock. And yes, it was a highly speculative stock. And guess where it is today? It's like zero. Okay, it went to 250. By the way, to be clear, during the time that Wall Street Reporter is involved with all these companies, the companies, for some reason, they do very well. Stocks do very well when they're on the Wall Street Reporter platform. When they're no longer on the Wall Street Reporter platform, for whatever reason, a lot of these CEOs, they develop egos and they think, they don't need to promote, they don't need to do this or that. And, then all of a sudden, Calvin. Well, actually, Calvin, we had a video. He actually he did something crazy, which I would never recommend. He started with one of our other stocks. He parlayed. He did a 3-piece parlay. And he turned like $2,000 to $1 million. So yeah, here's the thing. All the stocks that we've introduced on Wall Street Reporter, they're highly speculative. But guess what? The only stocks that I've been focused on, and again, I back in the day on Wall Street, and again, I want to talk about dollar market, but it's important that you understand the investment philosophy, right? So back in the day, Wall Street Reporter, we interviewed everybody. We did like 12 interviews a day in audio. Literally, we were the first guys doing this. We were doing, like 1,000, 12 a day. It's 1,000 interviews a year, probably. Everybody from 2 guys on a dog over the counter, New York Stock Exchange, NASDAQ, companies on the London Exchange, Australia, worldwide. And, we had a different business model. When I returned back to the business, I said, you know what? I only want to focus on dealing with companies that I believe have a potential to become, 10 baggers, right? I don't want to deal with guys who are looking for incremental upside. I'm not interested. I'm not interested in doing IR for companies and, just like telling the story, to milk them for, a couple $1,000s a month what is it? The IR fees, right? Everybody else in Vancouver, all these guys, all these promoters, all they care about is putting money in their bank account each month. They don't care what happens to the stock. They just want to put money in their pocket. You know what, guys? I don't care about that anymore. I'm only interested in stocks that become 10 baggers. Okay, I've made enough money. I mean, of course, I'm interested in making money, but I'm not interested in wasting time with incremental companies, whatever. I'm interested in only stocks that have that high potential to become 10 baggers or more. Okay. And those are the stocks that I've been focused on and that you guys have made money on in the last, 4 or 5 years, since I got back to Wall Street Reporter. Now, and again, pretty much every company that we ever introduced increased from the moment we introduced it. Almost without exception, almost every stock increased at least 50% before, some of them fizzled out and were, the CEOs didn't perform or whatever, for whatever reason. But the ones that did, I think, how many companies do we have? We had about 30 or 40 companies that we worked with, which is not a lot. 30 or 40 companies in a 4-year period, let's say. And 10 of them increased 1,000% or more. Another 10 became like 200%, 500%, or 100%. And the others increased maybe 30% before they fizzled out. Yeah. So bottom line is, I think I have a pretty good track record. I think I know what does it take for a stock to become a 10 bagger. So that is what you have working in your favor. None of these other CEOs have ever done what I have done. Now, again, who knows? Maybe the stock is going to go to zero. I have no idea, right? We have no idea, but I can tell you this. I know what it takes. I reverse engineered because when I wrote the book, I thought to myself, what does it take for a stock to become 100 bagger? Literally 100 bagger. And I said, what does it take? I reverse engineered that into doll market, because doll market, I believe, has that potential to be 100 bagger. And it's, by the way, that's nothing. What is it? The stock is what, 3 cents today? So we're talking about potentially a $3 stock, $600 million valuation. Is that what it would be? Let's say we have 300 million shares outstanding at $3, $1 billion valuation. What does it take to support $1 billion valuation? I'll tell you what, $100 million in revenues. Can we get there? I think we can. It's going to take a few years, and it's going to take acquisitions. We're not going to do it organically. We're going to have to make some strategic acquisitions, which are going to have to be accretive, non-dilutive. I mean, there's going to be a little dilution, but we have some very creative ways of doing these things, which are not going to involve, massive dilution. But again, the bottom line is I'm focused on maximizing shareholder value. Okay, I want this stock, New World Solutions, to become our next big winner. And this is not all of them. This is just some of these guys that went up between. Again, this is some of the stocks that you guys made fortunes on: CBDT, Imagine AR, Fans Unite, CYD, Visby. Wow, Peak FinTech. Okay, so yeah. Let's talk about this. Let's talk about, hang on, we got the great one here. I want to bring this up. Exactly. Joseph Napoli. Great. Exactly. 100%. This is where the market is. And you know what? I completely agree. That the market, now listen, frankly, listen, I don't want to be one of these guys saying, oh, my stock is undervalued. Every CEO thinks their stock is undervalued. Now, I do believe that the stock should be trading at least a 25 million valuation, only because I'm involved, right? Because I'm the chairman. And frankly, I think it's a value add. Okay. Anytime you have a guy who's got a track record that comes into a company, that's a value add. And I'm insulted. I'm actually insulted that this thing only has a valuation of less than 5 million. But I get it. I have to be humble. The market's telling me the reality. The market is exactly what you're saying. The market is saying, hey, show me. The market is saying, show me. And Joseph, you know what? I am showing you here. I am showing you the revenues that are going to come. This is not some fugazi, like where we say, oh yeah, we're going to launch a software. We're going to drill a mine. We're going to do stuff with AR. No, there's morons, there's retards in this business, in the watch business. You know what kind of IQ it takes to sell a Rolex, a used Rolex? By the way, a legitimate Rolex. You know what kind of IQ it takes to sell a used Rolex? I don't know, room temperature. It takes a room temperature IQ to sell a watch like this. Okay, I know guys who are complete. I don't know how they're able to tie their shoes in the morning. Okay, so I'm showing you right here, this right here. We got this. We got this. We got all this other stuff, right? Again, this is going to look like a QVC commercial almost, right? Somebody said I'm the sham wow guy. Somebody said that on one of the other channels. I think maybe I should be flattered, because that guy was very successful, the sham wow guy. But right here is basically it's 100 grand organic revenues, which again becomes $1 million in annualized run rate, which should be worth 10 million, which means I think the stock should be, I don't know, what is it? At least a nickel a share. It should be forward looking. Again, my opinion, which is not far from where it is right now. I think the stock is, I think it should be a little bit higher. But you know what? I'm perfectly happy with where it is right now, because I want the market to move by upside surprises, right? That's what it takes. Again, if you read my book, 10 Bagger Blueprint, you got to have upside surprises. If I told you everything that we have going on, then it wouldn't be a surprise anymore. Then it would be buy the rumor, sell the news. I want there to be an upside surprise where we have a press release that comes out, which has real fundamentals in there, where the market goes, wow, okay, this is legit. Okay. And by the way, here's the thing. This company, let me address the elephant in the room, New World Solutions. It's got a lot of baggage. REGRF, this thing has a lot of baggage. It's like one of these other, Vancouver, Scamcouver companies. Let's be real, Canada's greatest export is scams. 99% of the stocks in the CSE, the TSX, they're fugazi companies. Okay, they're fugazis, right? 99% of them, maybe 98. I'm being aggressive. Okay, these guys are not. Most of these guys are not real. And by the way, if you guys ask me, how come a lot of these stocks, they went up 10x, and then the companies stopped promoting, they stopped going on Wall Street? Well, you know why? A lot of these Canadian CEOs, I'll tell you the truth. A lot of these Canadian CEOs, they're afraid of success. They're scared. They're not prepared for it. First of all, because for a lot of these guys, it's like a lifestyle thing. All they do is they take a company public for a shell. They do a quick pump with some AR deal, AI. They got plant-based foods one week. The next week it's cannabis. Then it's psychedelics. Then it's now it's AI. Then it's whatever is the flavor of the month these guys are doing. And they're just into a quick pump. They put a lot of money into promotion, and they sell their shares. They go into the next thing. They're not prepared for a stock to become a 10-bagger. And if it does, they're out of it, right? They're not ready for something to become 100x. Okay, I'm completely the opposite. My goal is, that's my biggest thrill in life, is making stocks go up. So I want to show a case study to go from zero. I want to go from 0 to 100, and I'm perfectly happy to get into this company with New World Solutions, which has a lot of baggage. It has all that scam cougar baggage of they were in one business and another business and whatever. It's like all these other companies. The only difference is this thing is real here. This is real, and the market doesn't know that. By the way, that, in my opinion, is the opportunity. It's something I talk about in 10-Bagger Blueprint in my book. You make your money. You buy pretty. You buy ugly, sell pretty. Okay, you buy something when it's ugly, when nobody believes in it, when it's climbing the wall of doubt, and then when it starts going up, the doubters and haters, these guys, the doubters and haters. By the way, great questions. I'm looking forward to ask. The doubters and haters, those guys are the rocket fuel for making these stocks go up. Okay, so let's get into this. Multiple paths to $1 billion market valuation potential. This sounds like an aggressive slide. I'm 100% serious about this. Now, I'm not saying it's going to go there. I'm saying we have the potential to get there, okay? And anybody that tells you that a company doesn't have the potential to become $1 billion company, whatever the number is, you got to run from those people as fast as you can. And by the way, it's a problem, unfortunately, in Canada. It's a different mentality, which I was not even prepared for. It's a real culture shock to me. In America, you tell people, hey, we're going to make this $1 billion company. That's our goal, $1 billion. And people say, everybody cheers. People are happy. In Canada, they're all doubters. Oh, you can't say this. Oh, it's over promotional. Oh, it's this. Oh, that's the regulators in Canada. It's ridiculous. That's why Canada is going. That's why the Canadian economy is in trouble. Look at the cover of The Economist magazine. Why is Canada in trouble? It's the mentality of the regulators, of all those people that they're afraid of success. Anyway, they're doubters, the haters. Anyway, I'm talking about the regulators. I'm talking about there's a certain element. Canada used to be, again, the frontier. It was the great frontier. You had all the great mining companies. Sure, most of them were scams, but some of them became multi-billion-dollar companies. Look at this guy, Frank Justra. What's the guy? Friedman, whatever his name is, Friedland. You had massive wins. Those are the guys that built Canada. Okay, the Edgar Bronfmans, not him, his family. Okay, these are the guys that built Canada, not these doubters and haters. So we got multiple paths to $1 billion market valuation potential. So let's get into it. Let me explain. Number one, organic growth. Again, collectible watches. This stuff is stuff like Rolex, Audemars Piguet. This stuff is high volume. This stuff turns over 10, 12 times a year. So if you have $1 million in modern Rolex, $1 million in inventory, you can turn that into $12 million in revenue. Something like this, it's going to take maybe a little bit longer. Maybe you'll do 6 turns or 7 turns in revenues. The vintage watches is going to be a little bit slower, but you have bigger margins there. But the point is this, right? If we have $10 million in inventory, okay? We turn that over 10 times a year. Let's do the math. We have $10 million in inventory, 10 turns a year. That's $100 million in revenues. And by the way, this guy's doing that. There's morons doing $100 million a year, okay? There's companies I'm talking to as potential M&A candidates that are doing over $100 million a year. That's right. I am talking to companies as, again, potential M&A candidates doing over $100 million a year. Okay, imagine if we close one of those deals. Why? One of the questions, which would be a great question, why should they do that? Why should they merge with New World Solutions? I'll answer that. But again, if we do, $10 million a year, turn over 10 times, it's $100 million. A great question one of you guys should ask was, how are you going to get $10 million? Wow, is that going to be massive dilution? You're going to have to raise billions of dollars. Well, no. Here's the thing. First of all, this stuff is more liquid than gold, okay? Rolex is more liquid than gold. And you can finance inventory, okay? Whether it's, some sort of specialized lenders, whether it's, private lenders, you're going to be paying high interest rates, okay? You're going to be paying maybe, I don't know. I mean, I think actually, the numbers we have, we could afford to pay 15% interest, okay? 15% interest to carry the inventory. And by the way, look, the inventory is highly liquid. It's secured. This stuff you could, sell any day of the week, any country in the world. So it's safe. The only thing that you have to be worried about is, hey, is somebody going to run off? Somebody going to run off with the safe. And that's why you have insurance, okay? So can we get $10 million? $10 million is nothing, by the way. We have some great questions. We have a guy that says, all the company, the companies that we've had on the program have raised over $1 billion. That's right. My clients have raised over $1 billion. I don't know what you've done in your career. I love these. He's got all the Canadian regulators. This is probably the guy that files all the complaints with all the regulators. That's what happens in Canada. These guys file false complaints with regulators. They say, oh, this guy said this. Oh, my God. And then we get a letter. We got to answer the letter. That's what Canada is. This is why I can't wait to leave and go to NASDAQ. Really, honestly, that's my goal. As soon as possible to go to NASDAQ, leave these crappy markets. So here's the thing. We can raise money privately. Again, we're not going to raise 10 million right away. We could probably start off with, let's call it 500 grand, $1 million. Again, a loan. It's a secured loan. It's not dilution. It's a loan. We're not selling any stock. It's a loan. Why should somebody, put in 500 grand? Because we're paying them 15% interest with inventory that's secure. Now, again, small risk, whatever. But again, public company, we'll even throw in some warrants. And by the way, again, not a solicitation, but there might be people watching this that might contact me and let us say, hey, you know what? I got money sitting in the bank that's paying me 3% or whatever it is, and rates are going down. I'll put up 100 grand, 500 grand. I got plenty of guys in the audience who'll do that. Okay, I'll put up the money. I'm happy to get 15% of my money. I'll write a check for a couple of $100 grand. So let's get into the details here. Hang on a second. Here we go. Okay, so organic growth. So if we do $10 million. We have $10 million in inventory. We turn it over 10 times, $100 million in revenue. Again, we're not going to start off with 10 million. The organic path is we're going to turn over the stuff we have in inventory right now, generate 100 grand in sales. We have cash sitting in the bank also, by the way, in dial market. There's plenty of liquidity over there. And then we can raise, a couple hundred grand, 500 grand for inventory in a few months. I got to bring in the right members of the team. We have to bring in a few key people onto the team really before we're able to scale that. But once we have those key people in place, we're going to be able to raise that money. Can we raise it? I think we can. Is it guaranteed? No, nothing is guaranteed in life. Again, this is a high risk stock, highly speculative, and it is again. Do your due diligence. Again, very high risk companies, not for widows and orphans. Now, here's the exciting part. We got the organic part, and we have M&A. The real way I believe that we're going to have where this stock, which I think the stock could move, I believe, in the short term, because it's going to take us a number of months to start scaling. Okay, it's not going to happen right away. I don't know. The first month we might do, I don't know if we do 10 grand or we do 100 grand in sales in that first month once we launch the e-commerce platform. I don't know. We could do somewhere in that it's in that spectrum. One of those numbers. Once we have the system in place, we'll raise money. We'll have, let's call it 500 grand, $1 million in inventory, so we could turn that over into sales. Again, let's do the math. If we have 500 grand, $1 million in inventory, again, $1 million is not a lot of money because it's secured. It is paying interest. It's not dilution. If we're paying 15% on this $1 million, we can easily still generate significant profit. Again, we take that $1 million, we turn it over 10 times. That's $10 million in annualized revenues. That's a potential valuation of $100 million. So again, I believe if we do that, if we can hit that $10 million run rate, we could be worth $100 million. And I think 10 million is not a high. It's not a high bar. So 100 million divided by 200 million shares outstanding, that's 50 cents a share. So does this stock have a path to going from 3 cents to 50 cents in the next 12 to 18 months? Yeah, I just gave it to you right there. If we hit 800 grand a month, $1 million a month in sales, the stock should have a 10x multiple. And again, do the math. I'm not saying it's going to go there. And again, I don't know, the multiple the market gives us could be greater, could be lower. We don't know. I think though, again, based on a normal market, if we have that hyper growth, if we're going again from that 0 to those numbers, we should get a 10x. Now, are we going to maintain a 10x 5 years from now? We're not going to have a 10x if the revenue slowed down. That's years down the road. I think for the first 3 years, we have a runway for hyper growth potential again. Let's talk about M&A. This is very exciting. We haven't talked about that. I wanted to put out a press release. The Canadian regulators. I wanted to put out a press release. I sent it out, and IROC says, which is one of these Canadian regulators. In the U.S., you don't have this type of censorship. In the U.S., you have a press release, you put it out, it goes on the wire, no problem. In Canada, these regulators, they want to look at your press release. And then they say, well, we don't like the way this sounds. Well, you can't, well, we don't like, it's all very subjective. It's not even facts. We're talking about we don't like you saying Rolex in your press release. Well, I mean, if I'm a mining company and I'm mining uranium, I can't say uranium. I mean, that's what the business we're in. We're in the business of buying and selling Rolex, Patek Philipe, Audemars Piguet. And that's the stuff we talk about on the channel. We don't talk about Timex because nobody's interested in Timex in our community. Okay, that's the thing. But that's what these guys do. So anyway, I think we can get a 10x multiple if we go again from 0 to that $1 million in sales run rate. Scott, interesting comment. I'm going to address that. I think actually this is wrong, but I'm going to address it because I'm glad you bring it up. I think that in the hypergrowth phase, you get a 10x revenue multiple. So if we're doing 10x, 10 million revenue, we're doing 5 million revenue. Okay, 5 million revenues is nothing. There's morons, backpack dealers, guys who are selling out of their backpack, who are doing $5 million in sales. Okay, you do that, you multiply that by 10x, $50 million valuation, 200 million shares outstanding. That's 25 cents a share, potentially, right? Worth 3 cents. Again, am I saying it's going to go there? No, but I'm saying there's a path to get there. Now, whether the stock goes from, to whether it goes to I don't know, 50 cents, or whether it goes to 25 cents, or whether it goes to $5, I don't know. Okay, I have no control over that. The market, especially once things get moving, has that control. But anyway, let's talk about the M&A pipeline. So we're talking to right now early stages of discussion. And this is the press release I wanted to put out for which the regulators didn't like. I said, look, we're in early stages of discussion with a number of companies, doing, up, somewhere, I don't know, I think I said $1 million to 20 million or $2 million to $20 million in revenues, okay? And they didn't like that. They didn't allow me to put that press release out. They said you have to have a signed LOI. Okay, fine. So I would have preferred to have that out because at least the market would understand what are the types of companies we're looking at, right? What kind of companies? So I'm going to tell you right now, we're looking at companies that are going to be synergistic with kind of our community, right? So we're looking for companies that carry the type of inventory, that have the type of marketing, that have the type of culture, and yeah, culture does matter, that have a platform that will be synergistic with what we have. Because again, like I said, I believe we're sitting on a gold mine. We got this community, which is, I'm saying it could be $200 million in potential revenues. If we plug in the e-commerce platform, which is already doing, I don't know, let's call it 10 million a year. They have the inventory that our people want, which is, again, they want the AP, Richard Mille, Rolex, vintage. We're gonna probably, I don't know, double their business. So it's gonna be synergistic. It's gonna be accretive. Okay, so those are the things I want to talk about in the press release. The Canadian regulators wouldn't allow that. Again, guys, you got to change your government in Canada. Again, look at the cover of The Economist. Again, this is not a political show, but here we go. So right now, we're having some, I think pretty substantive conversations right now with a couple of players. One of them is doing well north of $10 million in revenues. Could we announce an LOI in the next few weeks? Yeah, potentially. What are the probabilities? I think actually they're pretty good. I mean, when I say pretty good, I'm saying it's not 10%. I think it's north of, if I had to put a percentage guess, I would say north of 30% chance, which is pretty good. 50%, I don't know. I don't want to say too much because, again, I'm talking to a number of companies, okay? I want to have leverage. I don't want to be tied into any one particular deal. There are some I like more than others. I don't want them to know that. I mean, it's a negotiation, right? And a great question somebody should ask is, how are you going to be able to pull off this acquisition? A guy doing $10 million in revenues, right? And they're doing probably, I don't know, 5% EBITDA or something like that, 10% EBITDA, 8% EBITDA. How are you going to be able to do that? Why should they sell to you? I'll explain to you. But it's going to be, we're going to have a very creative structure. So again, my goal is to maximize shareholder value. And, so we want to have as tight a structure as possible. We don't want to have a lot of shares out there. We have enough shares out there right now, right? So we have, I think, a very creative structure that my team has come up with. I have some very creative people on the team, some deal makers actually in Toronto who are on the team, who've come up with a very creative structure. This attorney that I'm working with came with a very creative structure, which would be, let's just say, beneficial for shareholders. Okay, so yeah, we could do a $10 million or even a $20 million revenue acquisition, and again, the goal would be to put the stock again on that path to that big number that we talked about before. So the goal is, if we show, again, if let's say we do a $20 million acquisition. I think the market would value that at a 10x multiple. Maybe not right away. Maybe yes, maybe no. Okay. By the way, look at some of these stocks out there. I know some of these companies being promoted, like Aduro, a couple of these others, Fugazi stocks in Canada. They're trading at multiples of, I don't know, 1,000,000x revenues, and they have I don't know what they have. Okay. You have a bunch of these guys out there. So I don't think we're going to have an issue getting a 10x multiple on revenue, especially if it happens right away. Again, I'm not saying it's going to happen, but I'm saying there's a good possibility that it could happen. Okay, and if it does, 10 times 20 million is $200 million valuation. And do the math, okay? Do the math. Okay? Do the math. No, it's not going to be shares. It's not going to be shares. We have a very creative structure because we can't do a thing with shares. No, it's going to be a very creative structure. By the way, Why should they do a deal with us? Why should they do a deal with us? I'll tell you why. Because they got no other choice. If they want to sell, they're not going to get any money in the private market as a watch business. They're not. The multiples aren't there. As a public company, the multiples are there, especially if we're the only game in town. We're the first guys to do it. And again, we've been there and done it before. Okay, so let's talk about the pipeline. By the way, at the bottom of the screen, some of the guys that are, again, watch collectors. You got Kevin Hart, big watch collector. What's the other guy? Messi, another guy. These guys have like $100 million watch collection, 50 million, $100 million. No, I don't know about Messi, but 50 million for sure. Kevin Hart. Anyway, so we got a pipeline. We have a pipeline of 200 million in potential revenue. So what do I mean by that? Well, we're talking to a number of companies, e-commerce companies in the watch space that are doing, between, I think this is an outdated slide. Actually, this is the wrong slide, but guys doing north of 2 million to north of 100 million. Okay, those are the type of companies we're talking to, north of 2 million and north of 100 million. In the aggregate, it's about $200 million in potential revenues. Now, are we going to get that? No, I don't think we're going to do 100% of those deals. I think that we're going to probably do 1 or 2 deals, and that's it. Because we only need to do 1 or 2 deals. There's only 2 types of companies I'm interested in, and quite frankly, I want to share that. One is, I think it would be good for us to have a guy doing modern watches, meaning like, the modern Rolex, stuff like that, which is kind of the hype watches, very thin margins, but you got a high turnover. But the real money, and this is where, and again, there's two different types of acquisition candidates. You got guys doing, again, that stuff, which is high volume, low margin. And then you have guys doing kind of like your more vintage, neo-vintage stuff, which is bigger margins, a little bit less turnover. But you need to have the right culture and the right expertise to deal with stuff like this. Because again, not everybody, there's very few people who know, again, about the market for this. It's kind of a specialized market when you're talking about like, vintage Patek, things like that. You have to kind of know where the trends are going. So I'm looking for really 2, possibly 3 acquisitions. That's all we need to do. That's, again, not saying it's going to happen, but potentially. Because again, we don't need to go beyond that. If we bring in this guy right now, I'm talking to a guy doing, again, I'm going to say well north of $10 million in revenues. But if we do this deal with this guy, I think the stock is going to potentially move up significantly. Again, guys, just ask yourself a question. Let's say we have 300 million shares. Let's say we have 300 million shares outstanding, but we're doing $20 million in revenues with a nice EBITDA. Okay, EBITDA, meaning profits. What is that going to be worth? Is it going to be worth 5x or 10x? So let's say it's only worth 5 times revenue. So that's 100 million. That's 33 cents a share. Not bad, right? That's not bad. Okay. I'm not saying we're going to issue 100 million shares. I'm not saying, again, I'm just talking in possibilities, maybe this, whatever. I'm just speaking hypothetical. So we're in early stages of discussions, and we'll see what happens in the next few weeks. In the next couple of weeks, we could have some interesting news. Let's talk about peer group valuation multiples. Chrono 24, they got $1 billion valuation. They're doing about 100 million. It's a platform. It's not a dealer, really. They are doing some principal stuff. They raised about 100 million in their seed round. Investors include Bernard Arnault, LVMH, General Atlantic, big VC, Insight Partners, Cristiano Ronaldo, a whole bunch of guys, whole bunch of celebrities. Watchbox, now known as a 1916 company, $1 billion valuation multiple. Again, this is private market, so we may or may not be. I don't know how accurate this is. Could be off a little bit. They're doing about $300 million in revenue. I think that's pretty accurate. $300 million in revenue. They raised, I believe, $165 million in the last round. They're more of a retail player. Chrono 24 is all online. Watchbox 1916, they have retail stores. Bill Ackman is an investor. Mark Lazar, big hedge fund guy, and also Michael Jordan. That's the basketball player. So yeah, I don't know. It's weird, but a lot of these celebrity guys are investing in these companies. Maybe one of them will put money into our next round. So Risk Check. It's a early stage company, platform based in Singapore, I believe, or Hong Kong. Singapore, Hong Kong. I'm not sure. I think they did a $50 million. I actually don't know the numbers. They raised, we know, $13 million. Their investors in the last round was Jay-Z, you know, the rapper, Alibaba, and I think Google also, a couple of other guys. So let's talk about one of my favorite things. Actually, the numbers on this, oh, we got the wrong data. The market cap is less than 5 million right now, less than 5 million valuation. Here are the charts. We got the weekly chart up top. We got the daily chart at the bottom. And you guys know I love charts. You know I love charts. I say the charts don't lie. I don't think the chart cares about what the company does. It's the charts are the charts. Now, what I like about the charts is, you know, I talk about this again in the book, 10 Bagger. By the way, I wrote this book long ago, years before I got involved with this company. So don't tell me that I'm kind of, you know, oh, I make no. This is something I've been saying for years. Everybody watching these videos knows my philosophy. I've articulated this. I like stocks, I like charts which have, you know, very wide double bottom bases that have had very high previous highs, because again, I have this theory that stocks like to go back to old highs. I'm not saying it's going to happen. Is it rational? Absolutely not. But this stock, I think I had a $5 high if you look at the stock chart. Am I saying it's going to go there? I'm not saying that. But we've seen that happen over and over again. But that's what this chart is showing us. Hey, it's not me, it's the chart. By the way, we are breaking out technically above the moving averages. I have it marked down at that's the annual chart at the bottom. That's the daily chart. The last time it happened, you see what happened. The stock zoomed up. So it's I think it's very bullish, the charts. Again, my opinion, that is very subjective. My opinion, not advice. You know, means nothing. Okay, let's talk about upcoming catalysts. So what could move the stock in the next 60 days? I think it's one of the most important charts. One of the most important slides here. Catalysts, right? Why should you think about buying the stock? You should not be buying the stock because of what it is right now, right? You're buying a stock because of what it could be. You got to go where the puck is heading. You can't chase after it, because by the time you're chasing it, you're too late, right? Most guys are chasing stuff when it's already too late. Anyway, upcoming catalysts, e-commerce launch, which I think could be interesting. I don't think the stock is I don't think it's going to be a big impact, but when we show revenues, I do believe that could have some impact on the stock, because then it becomes real. The revenues makes it real. Right now, nobody believes in this company. Nobody believes in it, and that's fine. I get it. I get it completely. It's actually, it's perfect. It's perfectly rational not to believe in the company, because the past history of the vehicle of New World Solutions, you haven't seen anything, right? So yeah, why should you believe? Of course not. It's not rational. But the market is not rational. Okay, you don't make money following the rational. Okay, so econ. This is actually very important. The OTC, the 15C211. A lot of you guys don't realize this, but right now, our U.S. trading in the U.S. stock REGRF is really screwed up, because we don't have the 15C211 on file, which you got to file a thing with what is it? The regulators in the U.S. And that opens up the market to, you know, you got to get the DTC eligibility, all that stuff. It's going to take a month or maybe a little bit longer. Very, very important, because right now, the U.S. trading, which we have, and which has gone from basically zero in August and in July. Before this deal, the trading in the U.S. was zero. Since we announced the dollar market transaction, since I got involved, the U.S. trading now, you know, we have days where it's a couple 100,000 shares a day. We've had million share days, you know, and the stock has been moving up in the U.S. By the way, the stock has doubled in the last 30 days since the deal was announced. So yeah, I think the market likes the story, but the market is right now rationally waiting to see, they want to see revenues. They want to see some, some tangible things, because again, I get it. Totally normal. So OTC trading, I think once we follow 15C211, that's going to bring in a lot of US investors. Right now, we're only able to reach like 1% of the US, maybe 2% of the US OTC. Really, it's a very small market. We're only, so we can't even market the stock properly in the US. We can't even do anything because we're only like a small, tiny fraction of the US OTC buyers can get the stock on their online platform. So let's talk about okay. The other thing is the M&A pipeline. So the M&A, any type of LOI, I think should be an interesting catalyst. I think the real catalyst, frankly, is any type of M&A. Again, I'm just telling you guys, because most of you care about what's going to move the stock. You don't care about the watch business. You don't care about whatever. You only know about what is going to move the stock, right? What's going to move the stock? Any type of M&A announcement, meaning an LOI, signed LOI, e-com launch, possibly. I think the 15C211 filing is very, very important. Okay, with that said, let me get into the Q&A. Hang on, let me just pull up the slides. Let me pull up my favorite slide first. There we go. Let me do this here. Okay, let me get to the Q&A. Guys, just put up your questions. We'll have them pulled up. Ben Baker, hello. Okay, volume. Yes, the volume is coming. We had the last week it was a little quiet for a number of reasons. I think you're going to see the volume come back in a big way. I love this guy. I love this guy's username. He's got all the Canadian regulators in there. I guess he's trying to scare us or something. Why bother partnering with New World? What was your relationship with them? We have no relationship with New World prior to this. This was, I thought it was an interesting vehicle. We talked to a couple of other companies. This one had an interesting fit because also they're doing stuff with blockchain. Now, we did actually, GBLC was a client of Wall Street Report like 3 years ago. They did a program which was a total disaster because that was one of the disasters. I blame it on them. And this is, they showed up on the platform. They were introduced, and I didn't want to bring them on. They paid us a bunch of money. I couldn't turn it down. I mean, it's hard to say no sometimes. So anyway, we brought them on, and then they never really did anything. They had some crypto thing, whatever. And it was a disaster. So, and then we had nothing to do. And actually, we tried to do something with one of their stocks before, which was we didn't do anything. But that was a whole nother story. So there was no relationship. Let's see here. Promotion. Stay tuned. Stay tuned. Yes, news flow. By the way, there is news flow. We're putting out, I mean, right now, how many we had? I think 3 press releases in the last 30 days or more, 4 press releases. I think you could expect until we get to the e-com. We should be doing one a week. They're not going to be major releases. We're not going to be doing, massive news every week. We actually do have a pipeline of weekly news that we're going to start putting out there. There's, frankly, it's been a bit of a challenge getting kind of into the rhythm of, the whole, dealing with the regulators of submitting the press releases, the stuff we could put out. So things got a little bit, but yeah, we have a pipeline of, weekly news. It's the stuff that's going to be weekly is not going to be like, major material stuff. It's just business oriented stuff. It's more stuff for the dial market stuff. It's not like stuff that's, material stuff, but it's stuff which is important about, for the watch thing. Okay. 10 million revenues. What sort of margin? Great question. The margin, we're targeting roughly 10%, meaning that the gross profit, let's say in a watch like this should be, let's say this goes for like 11 grand. We should make about $1,000 on this. It depends on different factors. On the vintage pieces, the margins are bigger. They're actually, could be significantly bigger. And also the market does move. So the market does move on stuff like this. There is a bit of a, I don't know if you want to call it a market risk, but we are actually taking a position, almost like a trading desk, where we're saying, okay, here's what's coming out at auction at Sotheby's in whatever, a couple months. We think this could move. It could set a new benchmark in the market. Here's where the trend is going. And we want to be positioned in these watches now so we could sell them 6 months from now and, at maybe double or triple. And that happens in the watch space a lot. But really, it's 10% is really the number. You will need to acquire inventory to sell. Again, I addressed this. You're asking a very interesting question. So yeah, on my desk, you see it right here, whether it's this Piaget Asprey, which is like one of these sold for about 18 grand at auction. So could we sell this for 18 grand? In theory, yeah. In theory, we could sell. Yeah, we own it significantly less. Could we sell this for 11,000? Yeah, we could sell for. This is stuff that's owned by Dial Market in the inventory of Dial Market. So we got about we have inventory on the books that should result in close to 100 grand. We have enough right here. We got enough right over here to generate about 100 grand a month, 100 grand in the first revenue in 30 days. Let's call it, okay. In theory, we put this on the platform, the e-commerce platform, and I know the buyers already for a lot of this stuff. We put this on. We could do 100 grand a month. Will we do it in the first month? Will we take 45 days? I don't know, but we could hit that 100 grand a month. We take that 100 grand, we buy the next thing, and then, by the way, the next thing after that is we do a small. It's not going to be an equity raise. It's going to be a. We're gonna do this with some promissory notes with maybe some warrants attached. Maybe some warrants we might give. Yeah, we'll just take in 500 grand. We'll bring in 500 grand. We'll use that. Take that loan to finance inventory, paying interest, and it will. And that 500 grand basically becomes 5 million in revenues. Again, 500 grand times 10x, 5 million. Again, not saying we'll do that, but that's kind of what we're targeting. Great question. So the real money, the big money, would only come to finance inventory, and that would be loans. So it's not going to be equity. It's not going to be dilutive. We might do maybe a small raise at some point, like maybe 100 grand or something like that. Nothing big. We've had people reaching out, some family offices. I think I've mentioned this. We've had some family offices reaching out. When I say family offices, it's guys that, running $50, $100 million who are actually active in the microcap space. People who have made money with the stocks featured on Wall Street Reporter in the past. Okay. So in particular, one of these guys who has made a lot of money with, as a result of Nextech and Fans Unite. It's a gentleman that is very active in Canadian mining stocks also, apparently. He wants to put in money, but he doesn't want to buy in the open market because it's going to move the stock, right? So there's a lot of guys who don't want to buy in the open market because it's going to move the stock. If you can't buy 5 million shares in the open market without the thing going to a nickel, right? So maybe we'll do a small raise, 100 grand or 150. I don't know, whatever the number is. Possibly, I don't know. If you have the product, how do you get the product at price? I love this guy's questions. These are like the most basic questions. How do you get the product at a price that leaves? How do you make a profit? Well, you got to buy it right. You got to buy it right. I think I know who this guy is. I mean, you got to buy it right. Okay, you got to buy it right. It's like, listen, it's like being a used car dealer. I hate to say it. Used watches, it's like being a used car dealer. You got to buy it right. Mr. BCSC, when you go to sell your used car, the guy offers you not a lot of money, right? So yeah, well, we're going to do a little differently. We want to give people a fair price, but we got to buy things right. And hopefully we're going to be right 90% of the time. Sometimes you lose money or you break even. Sometimes you overpay or something goes wrong, whatever. That's the way it works. And sometimes you make a lot more money. By the way, I got to tell you something. What's interesting. I'm doing stock promotion 20, since like, I don't know, I'm like 20 years old or something. I'm doing it like a long time, okay? Wall Street Report has been around since 1996. I'm doing this forever. I've created over $1 trillion in wealth for investors. But I took off about 6 years. I said, I had enough of these companies. I'm going to do, I got into the business of buying and selling art. I was an art dealer doing auctions for about 6-7 years. I think it was 6-7 years, high-end art, listed artists, guys who sell for, big money, right? And same thing. It's the same thing like watches. You got to buy, it's used paintings, right? So what was I buying and selling? I dealt with artists that had a market. They had auction records. So there was an established market, collector market, which is a very small percentage, by the way, of all artists. And that's the stuff I would buy and sell from auctions, from private collectors. Same thing, same exact model, but with watches here. Except I'm not going to be doing this part with the watch. I'm going to bring in the people to do, because I don't have the patience and I don't have the expertise to do this, frankly, to buy and sell watches all day. That's a whole different mindset. But how did I sell? How was I able to sell a $600,000 Robert Rauschenberg painting? Do you know who Robert Rauschenberg is? Do you know who, I don't know, Frank Stella is? Do you know who, what the hell's his name? What's the other guy? I don't know. They're the pop artists. Anyway, how was I able to buy and sell, $500,000 paintings, right? Well, if you have the product, you can sell it anywhere, right? So, I had the product, right? I had this painting by Robert Rauschenberg that, now I didn't own it. I took it in, I basically brokered the deal. Okay. I basically brokered it. I didn't put up the money, but I brokered the deal and made a small percentage, like, I don't know, 10% or whatever. And, but I had the product. It was on our online platform, and it was sold to a major gallery in Paris, major gallery, okay, in Paris, who then flipped the painting for €1 million. So they bought it from me wholesale. They sold from it. What am I upset I didn't get the full $1 million? No, because they have a different type of client. My business was basically selling to dealers, selling to galleries, institutions, wholesale level, let them make money on it, whatever. But if you have a product, it sells itself, right? The product sells itself. If you have a Picasso, it sells itself. If you have a Rolex, it sells itself. You don't need to do a sales job. Great question. This is absolutely not true. Now, the market is down, but the market is, it's down from crazy numbers. During COVID, the market went bananas. Watches doubled and tripled in value. This stuff is like going crazy. Like this watch right here. Okay, I'll give you an example. Yeah, so this watch, Rolex Submariner, this is the transitional, this is the pre-ceramic. I have the same watch. I have the same watch I own personally, same watch. Different, obviously, silver number and all that. But this watch went from like $9,000 before COVID to like 16,000. This is not even a good example. Something like this tripled in value from like, I don't know, 15 grand to like maybe 60,000, 50,000. And then the prices went down. Guess what? We're getting in at the bottom of the market. The market is, right around the bottom. Prices right now on a lot of the vintage stuff are down. Some stuff, by the way, is coming. It's like real estate. Okay, it's just like the real estate market. It's all localized. Some stuff is going up. Some stuff is tripled. There's a watch that we've been talking about on the on our live stream called the Audemars Piguet. It's called the Cobra. It's a watch we talked about. One of the ugliest watches out there. The Shah of Iran owned that watch, Pahlavi. That watch was selling for $8,000 last year. We talked about it on our show. I said, hey, this thing is going to move because this is where the trend is going. Nobody believed me. Everybody laughed. But again, listen, I'm used to that. You know what? I understand where trends are going. And just like everybody laughed at me when I introduced CBDT at a nickel and then it went to $2.50, just like they laughed at all the other stocks I introduced that became 10 baggers. Same thing with watches. I happen to know, I have an understanding of where trends are heading. Okay. And, it's just the gift I have. I mean, I don't know how to play, baseball, whatever. I don't know, whatever. I'm a terrible golfer. But yeah, I happen to have a real good eye for trends, being able to spot a trend way in advance, sometimes too early. But I was telling people this watch, these type of watches, and stuff like this, Patek Philipe Ellipse rare models are going up in value. I was saying that 2 years ago, a year ago. And guess what? That watch went from 8,000 to 25, 30,000 in the last 12 months. Audemars Piguet Cobra from 8,000 to 30,000. Is the watch market collapsing? Is it crashing? I don't know. You tell me. There's watches doubling and tripling in the last, 6 months. So yeah, there's different trends happening. And we're like a used car dealer, okay? We're buying at the bottom of the market because we're coming in. This inventory that I'm showing you right now, this was picked up in the last few months, in the last couple of months. So we got this inventory low. Some of these watches have already increased in value, okay? Stuff like this, there's a new benchmark. This is a Patek Philippe, what the hell is this? I forgot the name of the model. There's one from this family that sold for 25 grand. We're going to be selling this. Now, this one we own for, let's just say, I don't want to say how much because everybody, I don't want to say what we paid for because then everybody's going to say, well, I'll give you $100 more. That's how people say. So some of these watches have increased in value already. So the market actually has come down from COVID, but we're actually entering a golden age for watch collectors, in my opinion, because there's a lot of new people coming into the space. You can't buy an FP Journe. Okay, if the watch market is collapsing and it's dead, try walking into an FP Journe boutique, buying an FP Journe for $150,000, $200,000. Try buying a Rolex at a boutique. Try buying a Rolex. Try to walk into a Rolex dealer and walking out with a new Rolex. You can't. I love this guy. I love this guy. I love this guy. Fair, down. Okay, so the OTC trading is incredibly volatile. Guys, if you're trading over the counter, limit orders only. Again, not investment advice, limit orders only, because the stock has these crazy spreads. The other day, I love this guy. I love these gaslighting people. I love these gaslighting. This guy's a total grifter. We know who this is. His name is Mark. Okay, Mark, you'll be getting a letter from me, by the way. It'll be a surprise. Now, this the OTC stock was 5 cents or 6 cents the other day. It went from 2 cents to 6 cents overnight. Why? Because it's crazy volatility. It's got insane volatility. It's got 1 cent spreads. So yeah, the stock, there was one trade and the stock is down from 3 cents to 2.5 cents. Now you're saying, oh, it's 25%. Oh, it's 2,000 shares. A lot of the volume comes in later in the afternoon. So guys, you got to watch out for guys who lie to you, who do gaslighting on forums like this. Not much interest. You don't see this guy posting when the stock is trading 1 million shares a day, which I think it will be very soon again. Again, this guy was CBDT, a stock that went again. We introduced the stock at a nickel. Everybody was saying, oh, this guy was making the same comments probably then also, and it went to 250. Yeah, this Calvin made $1 million. Okay, sorry, I showed these comments. Okay, so we addressed this comment. Absolutely. The market is waiting for the catalysts. Joseph, 100%. We need to actually deliver on some of these milestones. Number one is launching the e-commerce. Number two is not just launching the e-commerce, but actually delivering revenues to show that it's real. That's important. Scaling those revenues. Okay, the market doesn't want to see 20 grand. The market wants to see, okay, they did 50 grand this month. Okay, you did 100 grand the next month. They want to see that. And number three is the market wants to see, maybe an LOI with a significant e-commerce company signed. That's what the market wants to see. I love, again, great comment, gaslighting. So yeah, the fact is we had about 40 clients in the last couple of years on Wall Street Reporter. Those companies raised in excess of $1 billion, close to $2 billion. One of those was an outlier called Fubo. And then he says, so they raised a lot of money. Nextech raised $100 million. Peak FinTech raised over $50 million as a result of what this guy doesn't tell you. I love to bring this up because I want to expose these guys, these scammers. With these guys, it's like the fake media. It's like the MSNBC. They're gaslighting. They're giving you this kind of partial spin. It's like the Trump rally where they show you, there's only 2 people there. They don't show you the 100,000 people. They don't take the camera, they don't pull the camera back, right? They only show you the 2 guys, the 10 people behind him on the back of the stage, right? This is such an obvious fraud. This guy's name is Mark, in Oakville, right? Mark, that's where you live, right? Anyway, so yeah, all those companies, they raised money, billions of dollars. Again, Fubo was itself like $1.5 billion. The others were like 500 million. That's the Visby, Fans Unite, CBDT could have raised. CBDT should have raised money. They were offered 50 million. When that stock hit 250, I know that they were getting offers of like, $50 million financing. They could have raised 10, 20, 30, $50 million. The guy went MIA. That guy was terrible. And by the way, our contract was up. So I'm saying, shit, I can't deal with this guy. And by the way, I had warrants. Did I have warrants or I had options? I made money on the options on that stock. I could have made more, but I actually did very well. And look, I cashed in. Where is the stock going to go? It's going to go from $250 to $25? No, it's, I talk about it again in my book, 10-Bagger Blueprint. You got to get into these stocks early at the ground floor. And usually 10x is when you kind of want to get out most of, because it's very rare that a stock is going to go to 100x. 20x possibly. Very rare it goes straight up. It's usually a long ride. Usually, you want to get out at 20x, 50x maybe. Maybe I'm saying a bad thing because, a lot of you guys, if this thing starts going up, you're not going to hang on till news goes up 100x. You're going to get out when it goes up 10x. I don't really care. I couldn't care less, because what's going to make this thing work is the fundamentals. Okay, the fundamentals, the revenue growth is the sustainable thing. Those companies, they had, look, the COVID also helped a lot of things. But by the way, just to answer the question, yeah, all the companies I had, they were able to raise money. Guess what? They're lucky because if it wasn't for me, they wouldn't have been able to raise that money. Okay, Peak FinTech, ask Johnson Joseph. He's quoted on the record as saying, hey, as a result of the exposure he got from Wall Street Reporter, thousands of investors found out about the stock and were able to buy the stock. And that's what helped move the stock up. And he had a catalyst. He had stuff going on. So was the value there? Yeah, the stock was worth it. Yeah, and I told you guys that it had that potential. Did it get maybe a little bit carried away? Possibly. But he was delivering real numbers. It was a great story. Things made sense for him. And he raised $50 million as a result of that stock going to, from 15 cents or 30 cents, was it? To $14 post-split, whatever, all that stuff. So, and again, just for the record, what this guy does not tell you is during the time that the stocks are on Wall Street Reporter, they are going up. Now, if a company decides that they don't need to promote the stock, they don't need whatever, I can't push them. And what they do 3 years later is not my responsibility. Okay, I never tell you guys to buy a stock, and I never tell you to sell a stock. In this entire presentation, I did not say one time that you should be buying the stock or selling the stock or whatever. I'm presenting you an opportunity. Again, I'm doing this here as the chairman of New World Solutions. I'm using the Wall Street Reporter platform because it's free. I'm saving you guys money. I'm saving the shareholders money, basically. Wall Street Reporter is not getting paid a nickel for this. So, so during the time that, I'm helping these companies out, whether it's also on the business side, on the strategy side, that's something we don't talk about even. It's not just the marketing and the promotion. So they're able to raise money. So why is this different? What a great question. Let's say it's not different. Mark, let's say it's not different. Let's say it's the same story. Let's say it repeats the same story. Let's say it's a pump and dump, as you call it, and it goes up to 50 cents. We raise 10 million, then it crashes. Well, at least you would have had a nice ride. You would have gotten in at 3 cents and gotten out of 50 cents. Not bad, right? Or it goes to 30 cents. You make 10 times your money, right? Now, I'm not saying it's going to go there, but again, if like as you say, if it plays out the same, maybe that's what's going to happen. Who knows? I don't know. I have no idea. I don't know if the stock goes to $0 or $1 tomorrow. Could go any direction. But yeah, again, you got to watch out for these gaslighters, these grifters out here. But again, I'm happy to bring up their comments. Again, unlike these guys, Mark, unlike you, I'm not hiding behind a screen name. I'm here in the arena, as they would say. I mentioned, okay, Scott Smith. Oh, Scott. Here's, by the way, this is the core sample. Scott is a guy, I believe Scott is in the Atlanta area, right? He was on our the Watch Reporter channel. I don't know where this question is, but yeah, so Scott was on our Watch Reporter channel. Actually, he popped in on one of our live streams and we did a quick collection review. He's got the Rolex GMT. And this guy, by the way, this is example. If we had a, oh yeah, Scott, you were saying about the full gold, and I said, yeah, the full gold, not Rolex, not for you. A little too flashy. This might be a good alternative. This is a dual time watch, Royal Oak, not as flashy, believe it or not. Although this is full solid gold, 18 karat gold, solid gold. It's actually not as flashy as the Rolex GMT. A little more subtle, under the radar, and this has a lot more upside. So Scott would have been buying our watches if we had them for sale. So this is one of the guys in our audience. So he's saying a good ballpark estimate of value is 5x annual profit. Scott, I'm not sure of the question. Okay, you're saying, is that the price we're paying for private companies? I'm actually looking to go in a lot less. I think the value for private watch e-commerce companies is, I don't want to talk about it here, but let's just say it's nominal. It's nominal. There's not a lot of enterprise value. As a public company, there is. So we got a very big arbitrage opportunity. Now, as a public company, we should be easily in the early stages. I would say in the first couple of years, where it's in that hyper growth type of phase. Yeah, you're trading at a multiple. By the way, I think this guy worked at I think you worked at, was it the New York Stock Exchange or something? So this guy knows. Yeah, it's trading at a multiple of revenues because we're a tech-enabled company, not 5x, even maybe 10x, maybe on a bad day when things slow down, when it becomes a mature company. Listen, when this company becomes, God willing, it becomes a mature company, doing, 100 million a year, 200, okay, let's say 100 million a year, 150. After that, you're not going to be doubling your revenues. You're going to be growing at, 20% a year. You'll be lucky. It's good, but you'll be lucky. At that point, you're going to be trying to maximize profits, right? But yeah, once this thing hits 150 million revenues, the multiple is going to come down. It's not going to be a 10x. It's going to be maybe a 4x or 5x. Again, depending on the profitability and all that stuff. Again, to be clear, I always want to repeat all the stuff here. I'm not giving guidance. I'm not doing forward look. I'm saying there's a potential for the multiples to go. There's a stock potential. I'm not saying it is going it. It's not price representation, as they say. Yeah, happy to have a conversation. You can reach out to me offline, and you have my contact info. Anyway, technically, this is not a reverse merger. This is a little bit different transaction. Regulators. Oh, you're talking about the. Yeah, listen. Here's the thing. I'm all for regulation in the market, and I think the U.S. does a very good job of it. The SEC. In Canada, you have a problem because you have, again, I'm not here to insult the Canadians, but you do have a socialist type of government. It's turned very socialist, leftist in the last, whatever. So they're anti-business generally, even though they claim to be. And TMX Group, TSX, is a public company, but their regulators are, first of all, they're all very, let's just say, how shall I say it, inexperienced, people at TSX, meaning they don't really understand how capital markets work. None of them have really a capital markets background, so they try to regulate. They have very subjective things they say. They use words like over promotion. They create a lot of gray areas, which are very bad for the companies, because basically they can go after a company and say, oh, you were over promotional. Oh, you gotta not say this, or oh, you gotta blah blah blah. How do you think business works? See, these guys don't understand how business works. Business works, what pays their bills, what pays for their toilet paper and the food that their children eat, okay? is paid for by entrepreneurs, okay? People who start companies, who go public. Those public companies generate fees on the exchanges. Investors make money. That pays taxes. That pays for all that stuff, right? But when you do over-regulation and when you say things, oh, you're over-promotional, oh, you can't do a press release saying that you're looking at potential acquisitions because it's, whatever the reason is, that's not helpful. That's not helpful for the companies. It's not helpful for investors. And guess what? It's not helpful for your career options either, because companies are moving away from the Canadian exchanges. At this point, I would never, and I work with a lot of companies that go public. I would never, ever recommend a company go public on the Canadian markets at this point. I actually made a mistake by going on the CSE exchange. I should have gone on the over-the-counter and then gone to NASDAQ from there, but I'm stuck here on the CSE. We're going to make the best of it and try to build the fundamentals to move up to the NEO or NASDAQ, really NASDAQ. And yeah, we could get there. If we get a couple, all we got to do is get a couple things lined up, and we could be on NASDAQ potentially. Again, in my experience, in life, there's a real fine line between success and failure. The difference between me and Mark Cuban is this small. We both had live streaming companies in the late 90s. I was doing Wall Street Reporter, streaming audio. I was going to take this public. We were starting to do a reverse merger. He was there a little bit earlier. He took his company public. He was doing live streaming of sports events. He wasn't even doing revenues. We were doing real revenues. We were doing $3.5 million a year in 1997 revenues, right? Profitable. We had a $40 million valuation. Now, I wasn't able to close that deal and go public for a couple things, and also the window closed. See, Mark Cuban, great sense of timing. Timing is important, again, with everything. And he had he had a couple of euros on me, so he knew the cycle. He got in and he basically sold his thing. He took a public. He got on NASDAQ. He had some really good connections, and he took it public. And Yahoo bought the thing. And of course, he was smart enough to get out to really kind of do a hedge on his shares. So he made $2 billion. And here I am, like a schmuck, 25 years later, still grinding it out. Again, the margin between success and failure is very small. And it goes both ways, right? So the margin between this company going to NASDAQ, it's not difficult. It could happen like that, okay? In 3 steps. It's like a chess moves, 3 steps. We do an acquisition of a $10 million company, a $20 million revenue company. Okay, we get a $200 million valuation. Okay, potentially $100 million valuation. Now we got a 50-cent stock. Then we do a $5 or $10 million raise. Now we're eligible for NASDAQ. Yeah, we'll do a reverse split when the stock is on the way up. Yeah, I have no issue with stocks doing a reverse split when it's going up, and when you have institutional support. Not the way the guys at Skylight and the other companies have done. So here's again the advantage that you guys have as shareholders is you have somebody as chairman here who's looking out for your best interest in mind, because I'm probably the biggest single shareholder in the company. My goal is to make the stock go to not 50 cents. I want the stock to go to $1 trillion a share. Yeah, why not? Okay, I'm exaggerating, right? But again, I own a ton of stock, right? I have 37 million shares plus. Okay, my goal is to make this stock go as high as possible, straight up. Okay, I don't care if the Canadian regulators are watching this. Yes, that's my goal, is to create shareholder value. See, these guys, these socialists, they're afraid for anybody to say that they have goals, they have dreams, they have aspirations. No, they want people to stay down. They want to keep you guys down and working for the man, right? No, I think people should be out there, reaching for their dreams. That's the way I feel, okay? And if they have a problem with that, that's their problem, okay? Listen, I came to this country as an immigrant, okay? I wasn't born in the U.S., okay? So I have dreams, all right? So that's the way it works. I'm here to live the American dream, not the Canadian dream, the American dream. And the American dream is to make this a $1 billion valuation company, potentially in the next 18 to 24 months. And yeah, we got a path to get there. we can scale up organically. We have potential M&A opportunities. You get a multiple on those revenues, and it all goes from there. Will it be a dilutive transaction? Yeah. So no, the deals we're looking at, the potential M&A deals we're looking at, would actually be very, very, let's just use the word creative. So there would be shares issued, but whatever the number would be very accretive. In other words, the goal is to make the stock go up. Yeah, to make the stock go up. It's not to have a bunch of shares out there. Yeah, I'm sorry. The goal is always to make the stock go up, and that should be the goal of every public company CEO. We're not buying digital. Yeah, it's interesting. I actually did speak with them. I had a conversation with Digital Watch World. I did talk to them, but they don't have any revenues. They don't have a real model. We could basically do the Digital Watch World model internally for nothing. Okay, and we're kind of working on it. Maybe I shouldn't say that, but yeah, that was part of the rationale behind the merger, because these guys have some blockchain experience at New World Solutions. They have this operation in Korea. So we could do a digital watch roll, but even better, like within a few months, if we want to. And we are kind of working on it. Talking about margins, the margins are all over the map. Depends on, again, what you're selling. I'm not sure I understand the question. Okay, I'm not sure I understand the question, but what I'm saying, okay, so anything regarding a capital raise. So we're not interested in doing any dilutive financing here. Could we do potentially a small deal to raise $100,000 or something like that? I don't know, in the next few months or something, because we have a strategic investor that wants to come in, like a family office investor. Yeah, possibly. If we have a strategic investor, a strategic investor, a guy that I actually know. I'm not saying he's not going to sell at some point, but we're talking about a guy who adds value. Okay, I want value add people. So yeah, if we have value add people that want to put in some money, yeah, we might do it. We might bring in $100,000, $200,000, but that's it. Anything more than that, let's say for inventory, it would be debt financing. Debt financing. We're not going to do any dilution. Yeah, absolutely. Yeah, okay, so Joseph Knapp. Yeah, exactly. So, yeah, bottom line is, look, let's do the math here. Let's do the math. If we're turning over $1 million, we do that 10 times a year, and we make 10%, that's 100%, right? So we make 100% on our money. So if we start out with $1 million, okay, we turn that over 10 times, that's $10 million, and we're making a 10%, gross margin, let's say profit margin. We're making $1 million profit. So yeah, we could afford to service debt. We could afford to service, $250,000. We could afford to pay 25% interest. By the way, when I was doing the art business, I at one point took on some private debt to do some deals. I paid crazy interest, like 25% equivalent interest, but I had huge margins, and it was short term, so I was able to do it. But yeah, we could do 10%, 15%, 15%, no problem. Okay, so we're not, I hate to use that word flipping. We're not, this is not like a private market thing where, a private guy is flipping a modern Rolex because he's got to buy the watch at retail. He's got to pay sales tax. Now he's already paid 10%. Then he tries to make, it doesn't, no, we're like a used car dealer. The market is down. When the market goes down, it actually brings in new buyers. It's actually bringing in new people because, like, there's a lot of guys who would not buy. They're not going to buy a Rolex Submariner for $16,000, right? But when it gets to 11 or even 10 grand, for the right model, like this one is, full with box set, they're going to be buyers. So again, it's a market. You understand, Scott. I know that you understand markets, right? And when prices come down, that also brings in demand. A lot more buyers come in, and that pushes prices back up, just like real estate. What happens when interest rates go down? All of a sudden, everybody starts buying houses. Same thing. No, I don't want to. I don't want to dilute. I'd rather raise. Yeah, it's a mix, but we're not. Again, we're not going to be we can't raise. First of all, we cannot raise $10 million here with an equity financing. It would just wipe out the company. It's impossible. We couldn't do it. Okay, the most we could raise here is, I don't know. I don't even want to raise money. I mean, I think I don't want to raise more than 200 grand maximum if we had to raise here, because again, the valuation is so low. We can't do a raise here. The only raise here would be for maybe strategic investors. The only raise would have to be like at north of, the stock would have to be north of a 25 million valuation to do a decent raise. Meaning that so if you have to do the math, that's north of 10 cents. So the stock would have to be north of 10 cents before we would consider doing a substantial raise, meaning like a $1 million type of raise. Maybe we don't even have to. Maybe we don't have to, because again, we could do, as I showed you, we could do debt financing. So yeah, there's a lot of ways to do this. Anyway, guys, thank you everybody for joining the live stream. And again, put the stock on your watch list. This is not about people buying the stock, selling the stock. The goal here is that you guys put the stock on your watch list, and follow the news and see what happens. Because again, I always believe what makes stocks go up is those watchers. Okay, look at this. Again, one of the FUDsters. Are you allowed to work or represent companies? I believe I read a rumor you aren't. I'm allowed to work with and represent companies anywhere in the world, okay? Everywhere in the world. We're talking about a Wall Street Report or whatever it is, yeah. So there's all sorts of nonsense, gossip, rumors, FUDsters, doubters. And I am happy. I am Mr. Transparency. I'm not scared to answer any question. All right, guys, again, because I believe the more people know about a stock, the more information there is, the better informed investors are, the more liquidity a stock can potentially have. Anyway, with that said, thank you everybody for joining, and we'll see you all probably in a couple of weeks. We should have another update, hopefully with some interesting news. So stay tuned.